Hi guys, this is the stock market update for the week March 7th to March 11th. Um, S&P 500 and all actually major indexes went up for the fourth consecutive week. It didn't gain too much, only 22 points. Last week was the week before actually was the index gained much more than that. However, it was a very volatile week. Market actually the week was down until Friday when from -10 went to +22. As you can see, 32 points advance only on Friday. So I think that the battle for this week and actually for this whole trend was done actually on Thursday, and I'm showing you immediately. Let's change this back to line. Okay, I think I can go to a couple of minutes, 2 minutes. I think I can see Thursday as well. Let me see. Yes. So on Thursday, when the European Bank announced another round of quantitative easing, I think initially the market went up pretty much close to 2004, I guess, was the maximum. Pretty much close to the previous high seen a day or two before. Then from here went down not less than 40 points, and at that point I say this is a major reversal day, okay? And that would be actually very telling that the market will go down from there. So I went on market watch and I say people be careful here, okay? So, however, by the end of the day, you recover everything and actually ended up like half of point on the upside. So the reversal day was pretty much cancelled. From here on Friday, we had a big jump up and obviously ended, as you know, on the upside. So let's look a little bit back to what. Let's go to 2 hours. Okay, have a pretty good look of the whole move down. Okay, and here the move up. So what are the conclusions here? Okay, this still, as you can see, it's still going up. No question about this. How much, however, it's hard to tell. I expected. Actually, I was wrong. I should look on weekly. Okay, there is the chart I want to show. So I expected much more resistance here at small 120. You know, I told you even before when you're like here, okay, that it may go up. Okay, that's not a big deal. It happened many times anyway. But this already moved a little bit more than I expected. A little bit, nothing dramatic. So we still have a pattern of higher highs, of lower highs and lower lows. So let me see here. So this is one topping here. Okay, roughly is not like a single day, single week. You know, look at the region around. Okay, but definitely this is another one. Okay, you can see it's already lower than the previous, and these are major tops. Okay, and then if you look at the bottom of the lows, again we have a low here, significant one, and we have another significant one which is lower than the previous one. So on this long term, we still have a pattern of lower highs in here, as you say, and lower lows. So as long as it doesn't go above this, so somewhere in here in this region, okay, and this trend remains down, so it makes another higher high, but not above this one, okay, not even equal or above this. I think I'm still bearish. I'm still bearish on this long term. I made a mistake actually. I got impatient. You know, always people do mistakes, and I do mistakes when I'm not clearly focusing, and I got a little bit probably bored staying on the sidelines, and I said, okay, let's go in and buy some SDS. So I bought somewhere around 918 here, which I expected to resist. It didn't happen, so now you see that was a mistake, and I'm telling you immediately what was a mistake. So I'm minus 42 points by now. Not big deal. I was a small position, but doesn't matter. I wasn't disciplined, okay? And this is very important, to be disciplined and have a strategy and following. So what I should expect, or should I waited for, is, okay, it went to the small 120, maybe a little bit up, whatever, maybe close to that. You don't short when it's moving up, okay? You short when it's moving down again, because there's no way I can tell what is. Maybe I'm expecting to hit one of these resistors, but maybe it's not gonna happen, okay? However, if you expect this, you from previous experience, you expect that, and it did happen going down, then you short. So so for example, it was much better to short somewhere in the, say, 1960 on the way down, okay? On the way down, but I was a little bit greedy. I say, okay, this is a nice entry, so let's do some shorting. So, okay, so that's not good. It shouldn't happen again. So again, if I see this moving in here but not above, and then I move down, then obviously I will add a little bit more on the short side. Okay. Okay. So this is the long term. Okay, which I'm not convinced that it's turn around as long as I see this. So I can see, I see actually potentially it can move to 2060 somewhere in this way, another 40 points this week or next week. You never know if you go straight up or maybe a little bit down, then again up. Okay, it doesn't matter. But as long as it stays below this, so if you're gonna see a closing on a weekly chart, which is this one, okay, at or below 260, and then another move down, then I think the bears should be in a good position. Obviously, after this, we need to have another lower low below this. So somewhere in here, okay, at least. Okay, I know it went down as much, even lower than this, okay, but not a closing. Look at here. So the closing was 1864, despite the fact that for one day it went as low as 1809, I guess. Okay, so let's have a little bit. Let's have a look at the other indexes, whatever they called. I think both of them are correct. I looked. Indexes or indices, both of them. Okay, so Dow Jones, pretty much the same situation. Okay, went a little bit above the small 120, not as dramatic as the S&P 500. Managed to move above the previous downtrend line, okay, bull market downtrend line. If you look at this, there's a serious trend line in here, okay? So even below that a little bit. And again, if it doesn't move above this, which is pretty much this is the most important downtrend line at the moment, okay? If it doesn't go below that, that's still a good chance that the market will move down. Okay. What else? Okay. So this is my trading system. This is the pair of the EMAS and the SMART which I use. Okay. People use different. So let's look. I never show you. But probably you saw from other people. About moving average 50 and 200 on daily chart. So those people, some of them are these are the most watched moving averages. So let's go this we're on weekly. So 200-day moving average divided by 5, that will be 40. Okay, and let's make this 10. Okay, 50. And switch to simple moving average. Okay, I'm gonna get rid of this. Okay, so pretty much that's what you see when most of the the people show you. Okay, so when they look at moving average, they look at single moving averages. I'm gonna tell you at some point why I'm using EMAs instead of exponentially instead of simple moving averages. I think they're more accurate actually, but doesn't matter. So the 200 moving averages, okay, was not as good this time. Okay, it was crossed many times compared to this look. But actually, this was on downside. I don't remember how it was on the upside, but on downside, look, pretty much this was never crossed during the move down. And market moves below this moving average many times actually, but what is also important is the direction. Okay, so if it's moving like in here, let me show you a little bit to zoom in. Okay, so if cross below, but the moving average is still going up, it's okay. Here, however, it moves a little bit down. So most of the time, this is very important. It's people are really, I mean, this is an indication that something goes really wrong. Actually, this is I'm talking about is the end of 2015. Okay, so that's actually actually without the Fed interventions, I'm pretty sure that would be another leg down. So, but they propped the market and whatever, it moved up from here. So, and in general, you see it's moving up. Despite the fact, okay, you move a little bit below, doesn't mean anything. Okay. Here again, right now again, it's again moving down. Okay, so we're talking about a major trend down, and now it's this is the for a longer period of time than was the end of the 2011. But I don't trust this anymore, you know, because I don't know. These are not for if I looked, let's move this, if I made them probably like an exponential, probably they'll look a little bit better. Let's see, exponential. So not really, maybe a little bit better. Anyway, so what I was going to tell you, what is important for these days is that the market actually moved a little bit above the small 200. Okay, so pretty much since the beginning of this downtrend for this year, I mean, okay, so here we're talking, this is, I guess it's the January move. Okay, as you can see, was crossed on the market move below. We had this move up, but not even close to go there. And now okay, we moved above SMA 50 and now a little bit above SMA 200. So these are very these levels, as I say, they're watched very closely. There are actually people who use computers to trade. They set up the computer and say, okay, if it touches this and move down, sell, or if moves up, buy. Okay, whatever. So let's see how it's gonna work. Okay. Again, this is the most important part in here. Okay, so another, as I said, another lower high in here. It's okay as soon as move down. If it goes up, if it's going here, we need to talk about something else. Okay, so bulls, then we will have a decent chance to do something on long term. Okay, even here, okay. That's still okay. It's much more bullish than this, obviously. Okay. However, as long as doesn't make a real high, really, I don't know. I'm going out of the chart here. Let's say, I don't know, 20,000 and DJ 30. They're not out of the woods. Okay. So I think that's it for today. You know. I can show you a little bit. I say gold. Gold this week move a little bit down again. All the lost 1.72 points on Friday. So that's pretty much what moved this down. But still looks good. Still looks good outside of the trading range. You know, the normal zigzag now the expectation will be to make a higher high. It doesn't mean it will happen, but that's the expectation in here. Okay, so I would consider this gold. I'm usually not trading, but I may consider this a little bit. Okay, so let's leave it here. So again, the last image was S&P 500. Let's leave it here, and let's see if bulls managed to push it above this 260. Okay. See you.